Welcome back to the Afterword, a conversation about the future of words. We are so glad to have Ivan and Mike here with us to continue our conversations about the intricacies of investing. All right, what are some of the ways you see new technology like artificial intelligence or cryptocurrency impacting investing?
Ivan, you want to take that?
Oh, yes, of course. I think, Holland, that artificial intelligence, or what I call programmable money, is if it has the correct engineer behind, and if it has the correct, genius, because it's the beings that control the AI, it's not the other way around, and if it has the correct supervision of that genius or engineer behind, because it cannot be just left there, and to do whatever he wants for 1 month, 2 months, or 3 months. He wants meaning talking to the AI machine, right? I think it's something that it can be predictable, and if it is predictable and is risk calculated with a very good of risk management ratios and risk profit ratios, risking low levels of balance in the investment accounts, I think it's something that is good and that I like for my portfolios. And then on the crypto world, one is a second parallel world. So we have the fiat world, which is supported by the government, and then we have all the crypto parallel world with the blockchains, which is supported by human beings with different projects trying to accomplish different purposes. So as soon as, if you understand the fundamentals, I always talk about the same, like get all the knowledge you can, make it make sense for you, not because of what other people is telling you, but because what you observe. So look, don't listen, I will say. Just look, don't listen, observe, and, see it operate with little amounts of money and see what happened with $1,000 and observe it and get comfortable and then go 3,000 and then to 4 to 5. And then it's all about step by step and going in step by step and not jumping into it. That's my viewpoint.
That's really good. Thank you for sharing that. Mike, did you want to jump in at all?
No, I don't claim to have a lot of expertise that way. My worry about it for the novice investor that we started the conversation with before is exactly what Ivan said, is about going in slowly. It's the FOMO, it's the fear of missing out. And then these instruments get developed that pull in people into these very risky things because they think that it's the thing to be in. And the people that are usually out there bragging about it can afford to lose money more than the people who are being lured into these very new and highly risky investments. So go in slowly. If you want to follow it, I say it to kids too. Put in 1% of the money that you own so you can be in the game, but don't pin your whole future on it.
Yeah,
yes. For sure. And one important thing, Mike, to that is that how you know if in what you are investing is something that will be speculative or not. I always will go by the definition of the word asset, which is something of importance. So you ask yourself, this thing that I am really investing is something of real importance for the humanity? Is going to affect massively the humanity? Is going to affect positively to people? It will be important for them? It will add value to them? If your answer is no, maybe 1 yes and 7 no's, you just don't do it.
There you go.
That's great. I'm going to use that with my students, Ivan. I like that way of making a decision. That's great.
All of this is in my book, Mike, so you can find it in Amazon.
Okay.
Good. And Mike, one of the things I was thinking about as an educator is something that Ivan said, is that you need engineers, you need the eyeballs, the humans behind the eye, right? So I'm wondering if this is not a new field that some of the young people can now start thinking about, being that engineer who is working in this new field, if you will.
Absolutely.
So I would want, in this 21st century learning, I would want to push kiddos that direction as an investment. But that's just where my brain goes.
Agreed.
Yeah. All right. So, Mike, let's talk about what you do with your Gray Bee Investors Club, because in your work with students, and it's been on the news. Your organization has just made a huge splash with so many kiddos. And so let's talk about a story that you could share about the highlights behind why did you, I know you talked a little bit about why you got it started, but let's dive a little bit deeper into this.
Yeah, boy, there's a lot of them. I think one of them is that investing isn't get rich quick. We received a donation from a generous donor, the Grossman Family Foundation, in early January. So we got into the market in a broad-based fund in early January with the idea of then taking portions out of it and making more focused bets the kids were closely involved in. And if anyone's followed the market since mid-January, you know what that looks like. So the lesson there, it's a great lesson for the kids, and then driving home the lesson of long-term investing. So we're in the negative since that happened. But I'd take it back a little bit further because it goes back to Ivan keeps making these great points. Bring the humanity into things. The students were looking at and ultimately made an investment in a semiconductor fund, an ETF. And I will tell you what, I'm not sure where the investment will end up. It's a turbulent industry, for those that follow what's going on there. But God, these kids knew more about Ukraine because they learned about where the products, the ingredients of semiconductors come from, and the supply chain for that. They learned about the dynamics between Taiwan and China and how China's watching what's going on in Ukraine because the companies that are in this fund operate out of Taiwan. So these kids, out of all the kids in my school, these kids had a way better picture than any of my teachers or my students about global affairs
How about that?
and economic things. So, and whether the decisions they made around that are right or not, I don't really care about that. I think I'm in the teaching business, and what did you learn from it, right? And maybe they'll learn that ultimately it wasn't a good investment. Hopefully that's not the case. But they're also learning about how all these things in the world are fit together. And I think that's part of the problem we have in our world and our country is we don't all understand how interconnected this thing is, and we all need to be appreciative of that a little bit more. But that would be one real-time lesson I would say that happened within the last 3 months.
Wow, that is so vital. And again, those are the lessons that you never forget.
Yeah, really true.
Ivan, I know one of the things you say is when philanthropy becomes humanity's main investment strategy, the world will start to change. Can you unpack that a little bit?
Yes, of course. Because there is two words in this philanthropy investing universe. Philanthropy, which is deploying your time and money for the enhancement of humanity without expecting any financial return. And then there is investing, which is putting your time and money engaging emotionally while getting a financial return. Because normally when you invest your money, the majority of the people is emotionally engaged because they have put hard work in order to earn that money. So they engage emotionally. So now if you tie both together, philanthropy investing, it is someone that puts their time and or money to improve human welfare, engaging emotionally while getting a financial return. So it's the combination of both worlds. It's not capitalism, it's not socialism, it's something there in the middle. You see, it's not traditional investing, it's not philanthropy, it's the middle of both worlds. So it's getting financial returns for your philanthropy. It's improving the world. So if we can come, there is right now some other information on the other investment strategies. First of all, you have the gambling industry. There is $500 billion going to the gambling industry every single year. $500 billion. And then when you look at the stock markets, 90%, and all of this is like if you Google and you go to the companies that do the research and the rankings and that they do all of that and so on, you will find out that 90% of investors, even new and seasoned investors, lose their money in the stock markets. And 95% of investors lose their money into the other platform investments like the foreign exchange, the cryptocurrencies, and all the other trading activities. So we are losing, like people is losing millions and billions and quadrillions of dollars onto these investment strategies. Then we have the top entrepreneurs in the world, which are leading us to try to solve issues or to try to conquer another planet before we solve the issues on this planet.
Oh yeah. Are we going to solve all the problems on Mars, Ivan?
Well, I am not like completely opposite to that. I think that there is some research that if we find good things for the humanity that can come from there, okay, let's send some billions there and see what we can find. But I think that we have all the capabilities to be able to solve the issues on this planet and align all the investment strategies into philanthropy for this planet, which means solving the big problems of the world has. Like, for example, only 8% of the population that lives in good air quality conditions. Only 8%. 6,000 kids that die of water-related diseases every single day. 80% of the water that is released untreated in the world. The US that recycles only 1%. 1 billion people that suffer from hunger. At the same time, 1.2 billion of tons of food get wasted every single year. 1 billion of illiterates. 70% of the population of animals declining in the last 50 years. 160 million people getting affected by natural disasters. So, and I can continue giving you all of these situations, but if we manage to the top people in the planet, like the trillionaires, the multi-billionaires and all of that, to be able to make the philanthropy, solving these issues, the number one strategy in the world across all banks, across all the funds, across JP Morgan, Bank of America, all the big banks of the world. And they just say, hey, guys, all the money is going to philanthropy investing activities, meaning like we're going to help the world and you're going to get a return for your philanthropy. And it becomes the main strategy, investment strategy for the world. Then the world can start to shift. And we can, because where we direct our oxygen, like what we breathe, which is the money that we use to accomplish things, right, is the results that we are going to be creating and the effect. So that's what I'm trying to say with that quote, Holland, that you took from my book or from my website, which is, I love the quote, yeah.
It's a good one. It's a good one. And listening to you and knowing the work that Mike does with young people, it just inspires hope that the world, we have lots of bad news. Some of those stats you were spitting out, Ivan, are very depressing, but you also give hope and a reason for that hope. And I'm so excited about that part as well. And I think about that for the young people that Mike and I teach, so that's really exciting. All right. So Mike, you talked a little bit about this in our other episode. There is something called generational poverty.
Yeah.
And there is a history of why those types of generational issues occur. And so as I'm thinking about generational poverty in families and communities, and you talked about it a little bit, Mike, about financial literacy and learning the basics, but I also understand, Ivan, you came from Argentina schlepping go-karts. So that was a stretch as well. So how do we support this next generation who are trying to work out of and change that cycle of generational poverty? Mike, what about you first?
Well, I'll start with it. And I think the beginning is a quality education. And that's before I even talk about whether there is financial education in the school. But too many kids in this country that are in these, that also have the families with generations of poverty. Too many of those kids growing up in those situations are also victims of poor schools.
Yep.
So without the education, that kid has a really tough climb. There are stories about those rags to riches, but let's face it, if we talk about education being important, then it ought to be done in the right quality for the poorest kids in the country. Sure. But that said, there's a lot on the back of schools to figure out. And I'm at a school and we haven't figured it out either, how to get this education to everybody, because schools have to pack so much into what they do every day. So it's not out, but you got to start somewhere. And that's the kind of person I am. And I believe that any kid that learns and takes a lesson from what we talk about today in a class or a club is going to be better off, has a potential to be. And I think what you said was, what's the agency? You should see. Well, I do a survey at the beginning of the class and I ask kids about what they know. And it's all the vocabulary. So the words you put up there, my list is a lot longer. And they don't know any of them. They can't put a definition on any of them. And I do that to make sure I know how to gear the class. And that's my assumption. And then by the end of it, they're learning to speak the foreign language, and you see the wheels start to turn and they go, well, what about that? And then they've seen something on TV the night before and they come back into class and they go, I saw this thing on wherever they saw it. And so what's that about? And the wheels start to turn. And with that, that's a form of empowerment. It's like, oh, wait a minute. This was a club I wasn't supposed to be invited to. And now I kind of understand how it works. And I kind of want to be part of this. And they come alive. And so part of it's just sort of giving them the tools and to realize you can get into it without getting totally burned and totally devastated. And that's the simple answer to a very complicated issue we have. Yeah.
That illiteracy piece is huge. The potential being incarceration pipeline is just huge. So I love how you kind of link that together a little bit.
It's like learning Spanish, having a good Spanish teacher in your school, and then you go on a trip and you go to Argentina. Well, actually, that's a different kind of Spanish there, right, Ivan? I'm told. But you go to Argentina and you realize, like, man, I was able to go out and order dinner. Like, I'm the man in Argentina. Like, this is really cool. I want to be around Argentina some more. You learn the language and you learn to function in the new culture, and you realize it's not so foreign.
Awesome. I love that. All right, Ivan. How can we support agency and break this cycle?
Well, I think that the answer to that is a lot laid out is connected to financial education. That's what I think, and not only financial education, but correct and true financial education, and also production education. Because the beginning of the financial cycle starts by production. People cannot have money that they do not produce. They need to get into that mindset. It's also, we break the generational poverty through mindset shifting. Like, we cannot have people depending and thinking that the financial will depend on someone else. They need to be able and willing to have that production education. How is it that I produce money? How I produce more money? I have a problem of money. Okay, so if you have a problem of money, you need to produce more money. How is it that I can do that so I can then use my financial education to invest and grow that money? So before you worry about, hey, let's just worry about how you manage your money. No. We are skipping a step. Let's educate people on how to produce money properly and how to produce more money and how to get more income revenue streams and how to when from a fall into the river, like fall, how you are that place where the multiple flows of income comes to you because you are producing them in some way. And so, that's what and how you work so you produce more, how you scale in an organization so you make more money, how you serve better the humanity, because the level of your service to others is the level of money that comes to you. The level of money that you have is how well you are serving others, and how much people you are serving and how much people you are helping. There is no other formula. But if we don't educate to the people on that, then we are missing that undercut below the managing money. That's my center.
Sure. And that's a tough one because, Mike, I'm sure you have kiddos in your classes where parents are working 2 and 3 jobs and not making it, they're trying to be producers. They have a good work ethic, but they're making minimum wage at 3 jobs, and it's hard to make that ends meet.
Okay.
So I really appreciate the educational part of that.
Yes, because why these people is working 3 jobs with a minimal wage? Something they haven't received the education on. Something on the mindset is not right.
Right.
It's not,
and that's Mike's point. That's what he was saying. Before we can even get to financial literacy, we've got to have good education, period.
Yes.
Yeah. And the good news for my students is they have a high likelihood of being able to put this to use by getting the education they get with us, or getting a good secondary education that leads them into a good post-secondary option like college, or like there's some awesome trade schools. We have a relationship with one where students leave making a real good wage and learn to run a business. They have an entrepreneurship thing. So I'm not talking just about college, but if you can get a good secondary education that helps you understand the best options for you afterwards, then that family pattern of one parent working 3 jobs has a shot at changing.
Yeah, that's the hope. And I love the idea of, finding those hats, Ivan, finding that passion. Mike talks about the language, it is so important to understand the vocabulary so that you can feel like you can navigate. I don't even know what hat to pick because I don't even know what those hats mean.
So but something is important. Like my book, for example, has, I think, a total of 220 pages. And from the 220 pages, 30 pages at the end are glossary. It's dictionary.
Good.
It's just a pure glossary. Good. Because if someone is not able to understand the section of a page, it's because there is a word they don't understand. So they need to go to the glossary. It's just simple, ABC 1, 2, 3 is cool, right?
There you go. Excellent.
All right. One last question before we go. What's a metaphor to better help us understand investing?
So this is the point, Holland, where we have to be really witty and give you something that works.
Exactly.
That would be great, but as long as it's a word picture that helps us visualize what's happening.
I'll give you a metaphor. I think in talking metaphors, a lot of people say, for novice investors, I'm a believer in diversified investing. And I think the best analogy I could think of, it's like keeping an apple orchard, and you buy the biggest and best apple tree you do your research and you get your breed of apple and you plant that thing and it pumps out awesome apples. And then a blight hits and your apple tree is wiped out and not producing fruit anymore. And that's what I call stock picking. It's like having an orchard with one apple, as opposed to diversified long-term investing. To me, would be like an orchard where you got a section with peach trees, and you got a section with apple trees, you got a section with pear trees, and maybe a cherry trees, and you've got a variety of options there that if the apple blight hits, you still got your peach trees and your pear trees to help you. And that's the principle of long-term investing. Have different types of assets, stocks or stock funds that perform well for you in the long term.
Excellent. And you don't get cherries or apples on the first year you plant the tree.
That's fair. That's a great part of that metaphor. That's the most important part of that metaphor, isn't it? Macadamia nuts, right? I think those take.
Oh my gosh.
Those take 10 years to produce fruit or something. Yeah.
Yeah.
Sounds more realistic. Ivan, what about you?
Okay, so what I think is that I prefer to focus on one hat and become really good in that hat on that sense. So if you just select one and you say, okay, I am a lender, okay, become a lender in real estate, become a lender in cars, become a lender in gold, become a lender in multiple verticals on that single hat. And use that hat until you are robust and strong with the knowledge and you feel like empowered by, you do it like very easily and like driving a bicycle. So the diversification, I agree with Mike 100%, but if you can do it under one hat, that, concentrates at least the hat at the type of business that you are creating. And I will say that also taxes are a very important part of the knowledge on investing. So you need to educate yourself on them and make sure that you create a team, because investing requires a team. So you will need normally an attorney on your side, a good CPA on your side for the long term if you're going to go, more big on it and serious about it, not just if you're going to invest $10,000 and that's it, but if you're going to grow, that's my suggestion there.
Awesome. So for Ivan's metaphor, if you're going to have and focus on the hat, I want to have all baseball hats, but I might have a green baseball hat. I might have a red baseball hat. I might have a blue baseball hat. I'm not going to get the cowboy hat because I haven't gotten all my baseball hats yet.
That's what I think, yes.
Okay. All right.
These were super metaphors.
Yeah.
They really were. They were great.
Thank you.
Before we go, Ivan, where can people learn more about you and your book and what you're doing?
Okay, so they can go to Amazon and buy House in Philanthropy Investing. There is more books coming out that I am working towards that I think you guys will love. Some of them will become a movie in the near future. And then you can also go to PhilanthroInvestors.com if you want to learn more about philanthropy investing. And there is a short link, which is pi.today, that takes you to all the podcasts that I have ever recorded. Even this one will be there. And then, and if you want to learn more about me also, you can go to ivanance.com and you will be able to download a chapter of my book for free and so on. So that's how. And you can, of course, follow me on Instagram, LinkedIn, Facebook, and all the social media, and I will accept your invite.
You are absolutely everywhere, aren't you?
Yes, yeah.
Okay. Mike, what about you? How can folks connect with you?
The two best ways are our school website, and St. Benedict's Prep is very simple. S like Sam, B like boy, P like Patrick.org. And my email is mscanlan@sbp.org. That's mscanlan@sbp.org.
All right. Well, thank you both very much. This has been quite a conversation, and I know I've learned a lot, and it's something I could stand to put into practice here. Join us next week for a conversation about the opposite side of the financial ledger. We'll be talking about loans and lending.
Yes, absolutely. And it will be a very fascinating conversation that we're going to have about loans and lending. But again, Mike and Ivan, thank you so much for being part of our conversation and joining us here at the table. Those of you who are listening, please leave us a review, rate us on Apple Podcasts or wherever you get your podcasts. Become a subscriber to the afterwordpodcast.com. It helps us keep the conversations going. And as always, please remember, you are welcome at our table.